All right, everyone. So we're just going to go over the ES and crude. There was one trade on crude that was available today, but before I go with that, I'll just go into the lesson. The first thing, one of the things you need to know is that obviously, you're a directional trader, you're trading with a trend, and this thing right here, right? This is really referring to the impulse waves. This is an oversimplification and basically referring to the rallies. All right. So it's rally 1, rally 2. All right. So these highs and these lows, markets trend right. So these highs and lows, this generally is the case, but this is oversimplification because as you can see, what the markets do, they have not every wave is a rally. They have corrective waves. So you'll have something like this, like making lower lows, like this, then like that, then like this, then like that, then like that, this, this, then like that, so, it does all these, right? This is more realistic, all the shit in the middle and all of that. But if you examine this, this is the impulse wave, this is the impulse wave, this is the impulse wave, and this is the impulse wave. All right, these are the rallies. So when you're looking at a trend, you have to be able to distinguish rallies from corrective waves, because the corrective waves is I think is number one reason why folks mess the trade up, because they get lost in the corrective waves. You get lost in the corrective waves, and this is a disaster. This is stop runs, all of that. The focus needs to shift from the corrective waves to the rally highs and lows to understand that these are the key support and resistance levels. It's the rallies, it's the rally highs and lows that are the key support and resistance. And if you then put it in this model, you see it's just rally highs and lows, making higher highs, higher lows, higher supports, and higher rallies. So the thing is, you have to be able to see this very clearly. So this is one really important thing about trend, which isn't really taught. And the second thing you have to understand is that because the nature of price movement, this pullback on a lower time frame will look like a trend. All right? So this equals this, and it will look like a downtrend. So this is why you must know at all times the higher time frame and the trend you're trading, and then the lower time frame for entries. And that's so this is the second thing I wanted to point out. The trends within pullbacks. Is your trend pullback, or is your trend like are the trend that you're trading, is it part of a pullback or is it part of the impulse? So you have to know that. Yeah. So is your trend that you're trading, is it part of part of a pullback? And the reason is you're gonna get screwed really bad if you don't know this. But as soon as these guys they come to a level, it's gonna look really bearish, and you might gonna take the short, but you should take the long. So the trend you're trading, let's say this is the daily, and this is the hourly, right? And this is the, all right. So let's say, is your hourly downtrend a daily pullback? Again, is the hourly downtrend that you want to trade a pullback on the daily? Or is the hourly uptrend you're trading not part of the pullback, but part of the dominant trend? Part of the impulse. You need to know that in order to get, and not only that, but it also has to do with risk reward and things like that. So you have to know this, because if you don't, you're gonna make a lot of errors. All right, so that's the second thing. The third thing, between the various time frames, always understand minute-based time frame don't have reliable trend structure. They are only entry. They are only for entry. Now, this is my opinion after understanding what's going on. I'll give you an example. Today. You see the hourly here. It cracked, and as soon as it cracked, I saw the breakdown. I saw the down rally, so I know to sell the pullback, right? Because of the breakdown rally, and it goes red. The breakdown biggest in 21 bars, rally on the downside, so it's going to make a lower high and then make a low low. But if you don't understand this, and you just look at the minute and it looks like this, say it opens with a rally, you might think this is a bullish structure, bullish trend, bullish whatever, but this whole rally is nothing more than a pullback on the hourly to short to get money on the downside. If you don't know that, you're gonna buy the pullback right here and get stopped out. All right. So again, the three things that I'm explaining: understand the impulses, right? Therefore, entry, minute-based time frames are for entry. They can also be used to for risk management, meaning in terms of the stop, by moving the stops to higher highs and lows and all that. So it's just, that's what it really is. All right, the money is not made by analyzing minute-based time frames, because they are not reliable. Minute-based time frames have very unreliable structure. This is also why, one of the reasons why there are a lot of losses, because you have an idea that the minute-based time frame is going to do this, when in reality it does that. Totally unreliable, right? So as soon as it opens, goes up, and then just goes down. Now, I don't know what the hell this is, but does this look like anything that you can rely on? It doesn't even make sense. Right, but here on the higher time frames, what do you see? This was the last bull rally. That was the low before the last bull rally, and it broke. The trend just turned down right here. So it had a breakdown, a rally breakdown, had a pullback, and made a low, done. Right? So now we're going to see what happens. But this is the clarity that this will provide. And yeah, so where was I? All right, so the thing is, what we're doing is we're looking for rallies on the upside or the downside, and we're looking for pullback, trade location, and entry. So this is the trade that presented itself today. This was the only one. And there was something in the ES, but it wasn't that great. So yes, it's a rally. Here's the pullback into this area, break. Now we'll go into knowing the exact entry and all of that. So first things first, I see the rally. When I see the rally, I look left, I look up, and I look left. Again, I look left, I look up. I look left, I look up. What I see is this high volume here. And what do you know? Before markets move up or down, there's accumulation or distribution. Where is the distribution? The distribution is, it's up there, but this is, it's right here, the 48,000 contracts, right? They're there. Market goes down. What happens? It goes back up to test, and when it goes back up, what happens? So I'm going to explain this now, all right, in a simple way. So when you have high volume, equals support and resistance. It can function as support and resistance. Why is that? And this is the logic here, is because for price to go above or below high volume, it has to absorb. Right? If it cannot absorb all that volume will serve as support or resistance. I'm saying this in the simplest way I can possibly say it without going into any complications. But the high volume, as price is going up, as price is going up, if you have a lot of volume, what needs to happen? Someone has to absorb all of this in order to go higher. And they're not willing to commit, then guess what? Oh, God. Price is going back down. Okay? Price goes up. There's a lot of volume. It cannot get through it. It's going to go back down. One of the reasons is if it goes up, there's a lot of volume. Whoever is on the wrong side of the trend that wants to get out they will exit the position as price goes back up because they took the other side of the trade and they want to break even. The second thing is whoever's on the right side of the trade will add, or new traders will come in and add because this area it bounced and it worked before. So you have existing traders and new traders adding their positions or adding new positions, and losing traders exiting their losing positions. All right. Anyway, long story short, high volume equals support and resistance, and when it gets up there, can it absorb? If it can't absorb, it's going back down. Done. All right. So where do we see high volume? And so when price rallies down here, do you see high volume? I do right here. The 48. That 48 is 48,000 contracts, and when price goes back to it, it can't get above it. Can it get above it? No. It rallies down, comes back, can't get above it, rallies back down. There you go. This is what I just taught in action. Where price rally down, pulls back to test, can't get above it, can't absorb it, so it goes back down. Because this high volume is serving as resistance. Just like when the market went down, it is not coincidental that it bounced right here, because this high volume is serving as support. Ta-da! Alright, so that's important to note. Alright, now let's go to the next. Yeah, I don't know what happened here. I forgot, but this was a great trade when it went down and set up the bounce, went up here, and all that. Now I don't know what's going on here. So on the ES, oh shit! All right. So yeah, I want to see. Okay, first of all, what is the trend? The trend is down. All right, the hourly trend is down. Now, what is the hourly trend? It's just a pullback within the day. It's just a daily pullback. This daily pullback is this hourly trend. That doesn't mean you can't trade it. You just need to know the levels on the daily where you're gonna back off, because the daily trader is gonna come in and rip you to shreds, right? So because they're gonna buy right here, I think, because this is a good place to buy. So this is offering the pullback, and you can catch rallies. So this is one down rally. This is second down rally. It might upthrust right here. So I'm looking for it to. I'm seeing what happens here. All right. I don't. It's too late right now, so I'll wait till tomorrow and see what's going to happen. But I'm looking for it to upthrust and then come back down into the daily range, daily zone right here, and that's where I back off, because the daily traders are likely to step in, right? So this was the uptrend. This was the selling. Again, you see the clean breakdown. Lower high goes down. One little upthrust. We might get another that sets up the next lower rally, right? Which will set up the buy trade on the daily participants. And that's about it. So I'm just going to wait until it comes up a little, see if it's ready for a short. But we have to be careful because the daily participants may just come in. So just have to watch any buying waves. As far as this move here, the ES, It did have a move, but I mean, I was shocked because after this rally down, it made this upthrust, and this was a very nice upthrust to go lower, but it absorbed all the way back here to then go down. So, I mean, I'm surprised that it didn't break down here because this was a very nice, easy upthrust, right? But unfortunately, it went up here, and this is where the trade was available. But even this is a shitty move, and we'll just see where this thing plays out. So we'll just look for the upthrust and see what happens. And the hourly is down, but it's just the daily's up, and the hourly is basically a pullback. That's what you need to know. All right. Take care. Bye.